to the Inspire Wealth podcast with Prof, where we dive into the world of real estate investing and wealth building strategies. I'm your host, Mallory Meehan. I'm a real estate professor, attorney, and seasoned investor here to guide you through the ins and outs of creating wealth through real estate. If you're looking to take your real estate knowledge to the next level, don't forget to subscribe to stay up to date with our latest episodes and offerings. Welcome to another episode of Inspire Wealth. I am your host, Mallory Meehan, aka Prof M, and today we are joined with Scott Fong. Hi, Scott. Welcome to the show.
Hi. How you doing, Mallory?
I'm doing great. So Scott, you are from the West Coast. I know that you gave me a little bit of background, but why don't you tell us how you ended up getting into real estate and what you're currently doing?
Yeah, sure. So Mallory, I grew up here in San Francisco. I would say a very expensive area to own real estate, and was a financial planner 20 plus years ago. Left that business and started SIFF Investments, which is a fee-only real estate consulting practice since 2002. And basically, I help people who own direct ownership of real estate, whether it's a home, apartment building, commercial property. They've owned it for a while. Usually my demographics tend to be in the 50, 60, 70-year-old ownership range of their age. They want more income, but they don't know who to go to for objective advice. So I help them look at their properties, and many of their properties they've owned for a while are underperforming and they have a lot of equity in them. So I help them through most of the time a 1031 exchange, which is a tax-deferred exchange into another rental property or rental fund, investment fund. And on average, because we live in expensive markets, we're increasing our clients' income by minimum around 60% or more.
Wow, that's awesome.
Yeah.
So how do these people find you? Like how do you kind of tie
Yeah.
yourself together with these types of potential clients?
Yeah, mostly not from realtors. It's unusual because they kind of see me as competition, which I'm not really competition. I hire them on both the sell side and the buy side, different brokers, but mostly from financial planners. I receive their clients who have rental properties or highly appreciated homes, also CPAs and trust attorneys. So it's a little different route than what most brokers, whether it's commercial or residential, find their clients. I'm more working with the B2B route for working with strategic partners to find my clients. But I want more. So few people even know about my service, and since 2002, I think we're the only fee-based or fee-only practice that I've run into.
That's great. I mean, you're definitely capturing a market that needs it. So that's awesome. So are most of your clients owners in the West Coast, or do you have clients from all over, or what kind of background are most of your clients in?
Yeah, most of them they either have some roots or they even are moving out from the West Coast to go to different areas. Yeah, I mean, the most of my clients have owned or own in the Bay Area or California, and some Western states. And then I have worked so if they own on the East Coast or the Midwest or the South, they still probably are living here. I
Got
don't
it.
have too many clients that have called me from the East Coast, even though I'd love to expand my marketplace over there.
Yeah.
Yeah.
So give me an example. So let's say I come to you and I say, Scott, I have this rental property,
Yeah.
I don't know whether I'm in the right spot. What kind of a process do you walk your clients through to really get an idea of what's best for them and how to make a recommendation?
Yeah, so I think unlike a lot of brokers, I kind of look at it from a standpoint of it's not about just the best numbers, but I look at, oh, great, your property is worth, say it's $2 million. Do you have a loan on it? What are the returns? I'll get the income and the expenses and really figure out, what are their goals? I mean, this is a property that is maybe it's getting a 4 cap, but that might be okay for them because they want it close to home and it's in San Francisco and they don't want to invest anywhere else. And what percentage of their total net worth is from that property. So I kind of look at it. Some are open to it, even though I'm officially not a financial planner anymore. But in the real estate world, I kind of look at it and say, at least on the West Coast, at least 40% or more of um, investors' assets are in real estate. So it's good to know the liquidity, their risk tolerance, so forth. But my process is once I identify and they're open to other markets, other different types of real estate investments like Delaware statutory trust funds or triple net commercial properties, once I know they're open and they're not stuck in one area and they want more income, I'll educate them on their options. And are they comfortable with going from a 4 cap to a 6 cap? But if we have to trade that to Memphis, Tennessee to a Dollar General, is that okay with you? And for example, or a 6 unit building in Sacramento that might get you another $30,000 more income in retirement. And my process is I'm a flat fee, and I start from looking at per project for clients on each property. Because on an exchange, some clients want to exchange into 5 or 7 different homes from San Francisco to Austin, Texas, or something, and that requires a lot of work. But it's on a project basis.
Got it. Is there a particular market that you find to be kind of one of the hot markets or a lucrative market that you've been putting a lot of clients in?
Yeah, yeah, that's a good question because I started off, Mallory, like in the early 2000s, where we put a lot of money in the Pacific Northwest. People were familiar, and people didn't really back then, 20 plus years ago, invest across the country from the West Coast.
Right.
They would be, hey, I'm kind of familiar with Portland and definitely Seattle and maybe Sacramento. So I feel I don't have one favorite. I kind of look at every single market you can do well in. You just need to have an education, be educated on that area, have great resources like brokers and property managers that can truly manage your property, and make sure that the numbers really work. But I think I don't have a favorite market.
Okay. Do you have a favorite asset class?
Yeah, probably apartment buildings,
Mhm.
simply because I think there's a lot of renters in San Francisco, and there's only 35% homeowners here. So there's a lot of renters, and I think a lot of people understand that market because no matter where the economy is, people still need a place to live. And if you lower the rent on a residential property, even though you're not happy because you're not getting no longer $4,000 for that 3 bedroom, but you at some point at $3,500, you could still rent it. So I feel that's a lower risk for some of my clients than waiting for the commercial market to get strong, where it could be vacant for months or years.
Got it. So outside of 1031s, do you advise your clients on other strategies when they're hoping to diversify any other, financial strategies within real estate?
It tends to be mostly exchanges or some purchases of new money. But what I find is when people don't have timelines that need to follow, since exchanges are very, very restrictive on timing and taxation, that buyer clients with new money, even though I would love to help them, it tends to just be all over the place. Well, how about here? I have one client now that has a $500,000 in cash, and they're retirees and they're doing fine, referred from a financial planner, but they're like, how about Columbus, Ohio? How about Toledo? How about this? And then what I realized, I can't really help you because it's kind of all over the place.
Mhm.
So I tend to like majority is exchanges and it's quantifiable. And plus, to be honest, I feel like if you're going to charge a fee, I'm not an attorney or a CPA. If I can double your income or increase your income 60% from an exchange, you're not going to have a problem paying me my fee. And I feel I'm
Right.
worth it.
No,
Versus,
absolutely.
yeah, yeah.
Are you seeing any sort of regulation changes or shifts that you think people should be aware of, or, those that are maybe looking to upgrade, like some things they should consider?
Well, I think I'll bring it back to where the lawsuits are back into with the residential realtors. I think it has been, I've been, since August 17th, of course, the changes have been happening. I feel like the realtors I'm working with, I'm kind of coaching them. So in a weird way, I've been busy helping them because they think everything's okay, but clients are reading in the news from the Wall Street Journal and everything else and their financial planners. How should I negotiate if we buy something? Do I need to sign their contract? And so I think that's the biggest news. It's huge news. I kind of feel, Mallory, it's almost like maybe stockbrokers in the late 70s and the first fee-based financial planners. And so maybe I'm that fee-based financial planner for the wealth industry, for the real estate industry, but that's kind of feel where we are in the real estate market. It's exciting times. Um, I think there's going to be more people in the space of real estate that are going to realize, can I charge a fee? And should I charge hourly, whether it's investment brokers or residential, just purely to buy a home? I think people are realizing people want more value. They want more transparency. So that's what I find interesting because I think more solutions happen when you charge hourly or when you charge a consulting fee. If your pay is tied into the outcome of just selling something to sell or to buy, I don't really think you're looking at the big picture, in my experience.
Right. And I think that, a realtor is kind of like a one-off transaction, whereas you see other people that you are paying as kind of a longer term transaction.
Yeah.
So I think that's a really good point. So tell me, Scott, what are you investing in right now?
Well, I still have a 12-year-old, and so I'm looking at growth, even though I'm probably should be. Many people my age are looking at just pure income of their properties and maxing out their income. We recently just bought, I'm one of those people where I still like most of my investments close to home. We just bought a multi-unit here in San Francisco recently because the interest rates are so, my wife and I, because the interest rates are so high that you can actually get bargains here, even here in an expensive market. So again, like I said, I'm very comfortable with multi-unit, but I also know in the future, like a lot of my clients who are retired or close to retirement, triple net properties where they can buy a commercial property and get a higher cap rate with no headache and no management responsibility. It's not sexy, but it pays the bills and more. So I kind of find that's like the evolution of mutual fund stocks in the financial planning industry, and kind of like commercial real estate triple nets are like bonds, the equivalent. Very little headache, cause me
Very
little
safe.
stress,
Mhm.
and safe, and I get a good return.
Yeah.
But yeah, and we're also looking. Different markets that I'm exploring right now is Little Rock and Arkansas, up in the Ann Arbor, Michigan area, and also Cleveland, Ohio. But as you know, it's a lot harder to be experts in a lot of different areas like it is in the equity side. So you have to have your partners in place.
Definitely. I think that's one of the biggest misnomers is that people don't realize just how different markets are from one
Yeah.
location to the next. And just, one understanding one nuance can really make the difference between cash flow or no cash flow.
Huge, huge. And
Yeah.
then the numbers are so different. To change a cap rate on a $300,000 property, you get another $2,000 of income, and it just blows the cap rate off the roof, right? And so a lot of my West Coast or Bay Area investors will say that's a terrible cap rate in Ann Arbor, and I'm like, do you realize that was just one bad year, $2,000, and
Right, right.
it went from a 7 to a 5 cap, and that blew the numbers here.
Well,
So
you also have to say, what was your initial investment cost too?
that's correct. That's correct. Yeah.
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 So Scott, one of the questions I always ask my guests are, what books are you reading, and what would you recommend people interested in learning more about real estate investing look into?
Yeah, if I would say, like the typical, investing for dummies book is those are all great just to learn the basics. I don't have any, like, if I'm looking at real estate investing, any particular ones I love because every market's so different. And the most interesting thing I find about real estate, Mallory, is no one can really tell you where to invest, how much you should invest, and what is a good area for you. We can all define what an A area is, the top area, a beautiful area that you would invest in. But everyone has a different definition of a B, of a C, or B plus. And so the great thing about real estate is I think books can teach you numbers, and some of these books, and there's many of them. I don't have a favorite really, but I think, and I'm sure from your courses that you teach, that's what you can really help people with. And areas we can help people by telling them, but I really think it's the actual experience, and finding the partners who you really trust. And that's hard because in my 22 plus years of doing this, I'll be honest, there's very few brokers on the ground that I trust implicitly with my clients. It's just simply because their motivations, how they get paid, are differently than how I get paid. And they see it as a transaction, even though they say they aren't. And they're great people. There's good and bad in any industry. But that's the hard part in real estate. There's so many clubs, so many groups, so many ideas. You could make your money should you finance more and leverage more of your property. Depends on your situation. So I think real estate really comes down to we need more wealth financial advisors to really look and educate consumers in real estate, investors in real estate, what's good for you on your situation, not what's good for everyone. And the interesting thing is, if you hired a financial planner and they said, put your money in Google 10 years ago, all of it, and hope it's a high flying stock, it doesn't pay any dividends, put all your money in there, you would fire them. Most people would say that's not a good strategy. But to my point of kind of looking at, you have to really listen to yourself and educate yourself. Brokers will often say, hey, we have a 9 cap. How could you not? Your client, Scott, has $1 million. Here's a 9 cap. It's an up and coming area. So they're really just buying it on numbers and not really looking at the risk reward.
Yeah, I think that's a really important thing, that real estate is not a one size fits all kind of game. It's definitely very much what fits you, your risk tolerance, your motivations, where you're at in your lifestyle. And I think, those triple nets, those are definitely something that's a safer asset. You're not going to get the returns, but definitely something that's beneficial once you're into the retirement ages. And, I think it's a smart move from you to recommend those as kind of the transition. So Scott, if I'm an investor and I'm hoping to maybe get we'll call it a portfolio analysis, how
Yeah,
can I get in touch with you and how can I learn more about what you do and what you offer?
sure. My website's SIFF Investment, SIFF Investment, no S at the end.com. You can reach me at, Scott Fong, it's S Fong at SIFF Investment. And or you can reach me, just call me at 415-601-1051. I'm very easy to get hold of. Most of all is I give a complimentary consultation for 15 minutes to 30 minutes for every investor. I'm very upfront and honest in saying, if we can't truly help you, then that's fine. I mean, it's easy to evaluate most of my clients' portfolio pretty quickly, just because the majority of my clients have owned property for some time and they're looking for more income. But those are the best ways to reach me.
Awesome. Well, we'll be sure to put that into our notes here for this episode. And Scott, any last minute thoughts that you want to leave our audience with?
Yeah, there's one interesting thing with exchanges and just people who live in expensive markets that I call, which I'm getting into as I get older too. A lot of my friends are starting to retire. It's called the accidental landlord profile of an investor, and this is what it is, which I'm sure you know. It's a highly appreciated home, one that you have lived in, and you're over your 250 exemption, your $500,000 exemption, tax-free money, and you're like, hey, I want to move out and maybe I need to cash out on my home to retire on, or I just want to downsize. and be closer to my grandkids, what have you. Well, can't really do that without paying a lot of taxes if you're over those limits. So that's interesting for your audience too, to think about where they are in their primary residences if they have a lot of equity. And you can turn your primary residence, defer the taxes over those $250 and $500,000 gains. You need to rent out those homes for a certain period of time, but you can turn all the equity that's been in your home into your retirement income, because you can defer that, and whether it goes into another apartment building or triple net, but now you're earning income on it. So I encourage all your listeners. It's a really interesting. It's something we don't think about until we get to a certain time in our lives. But here we have this big asset, our home, and it's really not doing much for us. But we can turn that asset into retirement income and a nest egg for clients.
Wonderful. That's great.
Yeah, that's it. Yeah.
I love it.
Yeah.
Scott, it was great having you on the show today. I hope our listeners were able to take a little bit of, pieces of nuggets that you offered. And that's all we have for this episode of Inspire Wealth. I am Prof M, out. And for those who want a more hands-on learning experience, check out our online courses at inspirewealtheducation.com. Whether you're just starting out or looking to expand your investment portfolio, I've created step-by-step guides and resources to help you achieve your financial goals. So hit that subscribe button and let's start building your wealth one episode at a time.